Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Today, what we're going to discuss is a normal market, which is there's trades on both sides of the tape. What's interesting is we had a lot of people come into the boot camp in the last 6 months who were the beneficiary of an amazing market where the stimulus package off the bottom in March just led to this amazing bull market for, let's see, March, April, May, June, July, August. So basically 6 months, um, if you include the bottom of March. And it was amazing, great, profitable for many people. But now that the market is getting back to where everything is just not going straight up off the lows, we now have to get to the point where we're setting up trades on both sides of the tape, which, by the way, is a normal market. It is amazing. I keep using the word amazing. It's amazing when the bias is super clear and we just need to trade in one direction. The problem, though, for many traders is they're long only, which, again, that's not a problem. The problem is that they're not adjusting to those stocks that were long only. They're still trying to trade them long only, and they're buying stocks that are going down. And specifically, I just use Tesla as an example right now, where it's very common in the boot camp where people are trading Tesla long, trading Tesla long, trading Tesla long. It was exploding to the upside. But now that the tune has changed, the tape has changed in Tesla, many of those same traders are not prepared to make money coming into the boot camp because that's all they did. But now that they're in the boot camp, I'm going to show you a little bit of what we cover when we talk about order flow and how to set up trades on both sides of the tape. By the way, if you're struggling right now and the market has you a little confused, you definitely want to get into the boot camp. For a small $295 investment, you get the most amazing community that is just so willing to help each other, as well as you get me in real time from basically 8:45 a.m. to 4 p.m. every day, and you get the course that teaches everything. We're going to show you a little bit of that today. So our objective here today is to first get an idea of short sale ideas versus buying opportunities versus ideas that have a lower probability and how to manage those trades. And there's this area that we call the phantom zone, where the trade is still a buying opportunity, but not with as much aggression if it was a little bit more obvious. And I'm going to show you what that means so you can visually see it, because one of my biggest pet peeves is when you're showing somebody how to do something, you want them to be able to say, I know exactly what to do when Monday comes. And that's what I want to show you right now. So you can have like the minimum criteria to be like, okay, that makes sense. That's perfect. That's not perfect, but it's still a buying opportunity. And whoa, that one's all the way on the other side. It's a sell short opportunity. So I'm going to show you what that means right now. So we're going to actually head over to the charts, and we're going to take a look at two very simple to use softwares. First one is called FinViz, and the other one is a charting platform called TradingView. You can see tradingview.com. And the reason I use these, recommend these, is because they're affordable, for one, and I believe very simple to use. So we're going to start out with, we're going to take a look at first the market, and we're going to look at the market from a perspective of the SPY. Now, what we want to get, the first thing that we want to answer is the market obvious? And if it is obvious, in what direction is the market trading? So we have three key moving averages on here, the ones that most people use. And I wanted to use moving averages because they're very easy to recognize, very easy to use, for lack of a better way of putting it. So we have the 20, the 50, and the 200 period moving averages. They're all simple moving averages. And what we want to basically know is, first, are they in the right order? Meaning, are they in the right bullish order or in the right bearish order? So you can see in this moment here, which is actually from June, using straight up moving averages, not trading this massive rally off the lows. This is the moment where the 20's above the 50 and the 50 is above the 200. So from here forward, for the better part of 2 months, we had really clear bullish price action. And that's the period of time that I was talking about, where a lot of long-only buyers, a lot of people that are only buying stock, they're not selling short stock, which, again, nothing wrong with that. Matter of fact, it's the more common side of the market to trade on. It was a very easy time, but then price reversed very hard. Moving averages crossed over. Price was between the 20 and the 50 here, which that's the phantom zone I'm talking about. And then they actually broke the 50, and they were between the 50 and the 200, which is not perfect conditions. So what's interesting now is that we are back to what one might call perfect conditions. Now, we're not even adding into the equation whether or not the moving averages are sloping higher or if they're flat. It's very easy right now to say that the 200 period moving average is flat. You can make a case that the 50 is flat too. So that means the longer term bias, the longer term order flow is neutral right now. However, taking that a step further, you now have the 20 rising and it is above the 50. So right now, technically, all of the moving averages are in the right order, which is kind of interesting because this is really what separates somebody who's a chart reader and not making any money from somebody who's a tape reader and really putting the pieces together and saying, no, it's much more than that. It's above the 20s, above the 50, but everything's flat as a board. So despite the fact that I have the proper technical reading, it's not the same as if everything was trending higher, because one quick look at the charts and you can see that we're just back and forth, back and forth, back and forth. So we want to see a little bit of price action. And this is where we dig it a little bit deeper and say the difference now between short-term price action confirming what we see on the moving averages, allowing us to have more conviction. So what does that basically mean? Let's really drill it down. So again, so you know what to do on Monday morning. It means the 20 needs to be above the 50. The 50 needs to be above the 200 and all three of them rising. Then we take it a step further. We want to see what we call is a well-bid candlestick on the daily chart, which means a higher high and a higher low, and closing on the highs on that second candlestick. So we're getting short-term confirmation from the longer-term moving averages, and that's what gives us some conviction to get involved in those ideas. So with that in mind, we're actually going to take a quick look at some stocks that I have in my universe and give a quick synopsis so that you can be like, okay, that should have my attention. That should have my attention. Nope, that's doing nothing. Oh, that's a short sale. That's a long. That's nothing. We're going to do that right now in the list that I have. But the most important thing, again, is you need structure. And that's really where confidence comes from. That's where conviction comes from. That's where you reduce and eliminate hesitation. That's where you reduce and eliminate doubt, because you know what you're looking at. We have no idea what's going to happen next. We could put on two identical trades. One follows through beautifully, one does nothing, right? But it's our job to know exactly what we're looking for and then let the market do what it's going to do. So we're going to hop back over to the charts and we're going to take a look down through the stock. So the first thing we want to do is assess, is the market obvious? Now, I would say that the 20 is over the 50 and it's rising, but the 50 and the 200 are flat. So we are trading mostly off the most recent price action. And what does that mean? That means we have less order flow in our decision, because the longer term order flow means larger commitments from the smart money. Right now, we're just trading on the most recent price action, which is the last 2 weeks. Okay. So what we're going to do now is we're just going to go down the list based on how the stocks closed on, in this case, on Friday. So we're going to take a look. So the first thing is the bias is short-term bullish, but neutral on the longer term. That's the first thing. Okay, so Amazon right now, the 20 is actually just crossing over the 50, so there's nothing to do here. Again, we're looking for obvious. That's the big thing here. Lulu, the 20 is below the 50. The 50 is actually turning down, and the 200 is actually pointing up. So again, not perfect. We are looking for perfect. Facebook, 20 is below the 50. Again, not perfect. All right, DocuSign, a little bit different. The 20 is rising, the 50 is rising, and the 200 is rising. And if we zoom out a little bit here, not quite well bid, but we did close on the high. So that would be something that would be in my list today to at least pay attention to. Now, again, when I say pay attention to, that doesn't mean I'm buying it Monday morning. I want to see the price action trade above Friday's high to consider initiating a new position. So at least that's one that we'd be looking at. And again, we're not getting into price targets. We're not getting into stop losses. Right now, we're doing the most important thing. Is there a good idea? Because I'm going to tell you straight up, is there a good idea is more important than the exact entry price. You could learn to work the orders in pieces. You could learn to set profit targets, but you don't need to do that if it's not a good idea in the first place. So DocuSign is one that we would at least consider because the moving averages are in the right order and we close strong on Friday. Now, the one thing that is not perfect here, which would affect trade management, is remember what I said before, this stock is not above the 20 period moving average. That would be perfect. So because the moving averages are in the right order, we want to take it a step further and say, is it perfect? And in this case, it's not. We would want to see price action above the 20, which would have been one of these days over here. So better scenario is if it's above the 20 period moving average as well. Right now it's in that phantom zone between the 20 and the 50. So it's still a buy. It's not a buy with aggressive share size. So a lot to unpack there, right? But here, again, this is the key. If you're struggling, these are the kind of questions that make you a better trader. All right, so Netflix, nope, absolutely not. Roku, very different here, right? 20s above the 50, 50s above the 200, and 200 is here, and they're all rising, and price is above all of them. Roku would go in my list of something to watch today. All right, so Microsoft, interesting setup here. 20s above the 50, the 50's flat, 200's rising, but look at this. Microsoft is actually in that price action that we discussed, which is a higher high and a higher low, which is well bid above the 20 period moving average. So Microsoft looks like it's set to open lower with the rest of the market, but this would be one of the stocks that we'd be looking for relative strength and looking to be a buyer. So this matches the criteria. All right, SE, below the 20 and below the 50. They're all in the right order, but price is below the 20 and above the 50. That's the phantom zone. So now we're going to look at stuff on the other side of the market. Stocks that closed weak on Friday. So FSLY, the 20's above the 50. So there's nothing to do there. It's not in the right order. Boeing, the 20 period moving average is rising, although they are all in the right order. So it's rising. That diminishes perfect and prices between the 50 and the 200. So not perfect. So not much to do there based on the daily charts. Run, which was one of the strongest stocks, now is below the 50 period moving average. So it's between the 50 and the 20. So despite the moving averages are in the right order, price action is not in the right place. So nothing to do there. It's not perfect. PayPal is coming off all-time highs, right? We just had that news about crypto last week, and now it's pulled back and price is 20s above the 50, 50s above the 20, and 20s rising, the 200s rising, and I guess you can make a case for that. So this is a good trade, but not perfect. Why is it not perfect? Because it didn't close near the highs and it didn't close well bid. So you start to work the orders differently. So what we're really getting across here is a fast way to identify a good trade. Only then do you assess risk potential. Only then do you say, how much could I possibly make on this trade and is it worth it? So you see, this is really where one of the most simplistic parts of trading gets lost on struggling traders is that you don't understand how to build an argument for a trade. You don't understand that, yes, it might be above the moving average, but is it a good idea? And these are the things that we cover in the boot camp, building an argument, building an argument. You know where this affects you the most? You know where this affects you the most dramatically? When you stop taking trades that don't make sense. And all of a sudden, instead of having a week where you lost money 4 out of 5 days, maybe 2 days it was really light and you said, I don't see anything, which is awesome. And you pull back and now you save that money. And then 2 days, the market lines up perfectly. You make money on those 2 days. And then the 5th day of the week, maybe it looks okay and there's some opportunities, but you recognize that it's just okay and not perfect. You pull back a little bit. Maybe you make a little bit or lose a little bit, but you recognize it was a less tough day and you scaled back a little bit. So you had 2 days where you didn't do that much, 2 days where you traded confidently because it was obvious, and then 1 day where you traded but with less share size because your conviction level wasn't higher. And at the end of the day, that's how you make money. At the end of the week, that's how you make money because you recognize the market conditions. And again, I use the term driving all the time because driving really comes down to 70 yesterday, nobody on the road, stop and go today, stuffed with traffic at the same time. That's what makes you from chart reader to tape reader to profitable trader. And that's what I'm hopefully walking you through now. So if you have any questions, definitely leave a comment below. If you want some help in this in real time, both as a day trader and as a swing trader, where you want to buy on Monday and get out the next Monday, this is the whole point of the boot camp. So we can have these discussions in real time and during our coaching calls. Have a great day, everybody.